Hi everyone, Jasper here. Thank you very much for watching. Today's subject is all about the double entry system for accounting, which means for every debit there will need to be a credit. It always needs to balance. And I'm going to run you through in a moment with some exercises with what we call T accounts, and it's called T account because it's a T. And the T is really, there's a debit and a credit, or in the easier terms, and these days I see the accounting systems also show it in sometimes in increase and decrease, but you might have certain accounts increase on the debit side and some accounts increase on the credit side. So some of the accounts, let's call it the asset, increase on the debit side and it actually decreases on the credit side. So I will explain to you on T accounts in a moment how that works. And also a very good way of remembering the debits and credits is really just to remember certain classes of accounts increase on the one side and some of them decreases on the other side. So the list is really easy. Assets and expenses increase on the debit side and it decreases on the credit side. And income and liabilities increases on the credit side or the right hand side and it decreases on the debit side or the left hand side. So let's go look at some exercises, and I'll do my best with about 3 exercises to explain various entries to you. Right, let's first look at the debit and credit entries, or the double entry accounting for supplier entry. In this case, I've created the pre-populated T accounts for us. The T, like I said, is a T in the sense of a T. It looks like a T. And in this case, I've created the rent supplier, and now we will do the entries. So there's 2 components right here. There's a component of make a provision for the supplier or the landlord, and then also actually pay the landlord. So our first entry would be to make a provision as a supplier for the landlord. I've done it right here. There's a landlord, there's a supplier account, there's the bank, and there's the rent paid. So let's first do the entry for landlord for the rent, and let's just call it 50,000 rand rent provision. That's your credit entry, or on your right hand side the supplier increases on your credit side or your right hand side, and your double entry would be your rent paid as an expense, and an expense increase on the debit side or on the left hand side. Right, so now in your books you would have an expense reflecting 50,000 rand, and you will have the supplier or the landlord with a balance of 50,000 rand. Now a few days later you actually pay the landlord or the supplier, and in this case the supplier will decrease on the left hand side or the debit side, and your bank, that would generally be an asset, would be credited on the the entry would be on the right hand side for the bank, because the bank would decrease. So your entry would be a debit for the supplier on the left hand side and the credit in the bank or on the right hand side to decrease the bank. So in this case you will see the landlord has been paid fully, so there would be a 50,000 less another 50,000, so your entry would be a 0. So that is any entry that you will do for a supplier, you would do pretty much the same. There's no VAT right here. I don't make provision for any VAT because it's merely just to show the double entry system or double entry accounting. Right, so now we've moved to expenses paid by the director on behalf of a company. We need to look at how we would do that entries. So in this case, there's no money flowing from the bank account of the business. It's actually flowing from potentially a bank account or a credit card from the director. So, and in this case, the director's loan would be a liability, and the liability increase on the credit side. So let's say the director paid Telkom or telephone account on behalf of the company. The director's loan, let's call it 5,000 rand, has been paid by the director itself. It didn't went through the books, and your double entry with the journal would be 5,000 rand with the telephone account. That would be the expense account, and it would be on the debit side because the telephone account or expense account would increase on the debit side. And further to that, let's say the company, the director had to pay for some repairs and maintenance for the business, and again paid on from his personal capacity or personal account. He would again, let's call it 3,000 rand. The repairs and maintenance would increase because an expense, and an expense increase on the debit side. On the left hand side, the expense would increase with the 3,000 rand, and your double entry would again be the loan account of the director for 3,000 rand, because the liability increases on the credit side or on the right hand side. So in this case, with these two entries, the director would be owed by the company 8,000 rand to date in the books of the company. And lastly, I just want to run you through an accounts receivable. So if we look at the example, we're looking at, let me just correct that one for us. We're looking at a company invoice that's been issued by the company to customer XYZ for the amount of 100,000 rand, and a few days later the company receives 50,000 rand in the bank or in his bank account by the customer paid. So the customer still owes 50,000 rand to date. So the first entry would be to actually issue when you actually issue the invoice, where the customer would increase and your sales will actually increase as well. So customer is a asset which will increase on the debit side. So when you do the invoice, your customer will increase with 100,000 rand, and your sales will increase on the credit side with 100,000 rand, or on the right hand side. So a few days later, the customer actually pays into the bank account 50,000 rand. So now the bank becomes, like the previous example, it was a liability because it was money withdrawal from the company. In this case, there's money paid into the bank account. So the bank account is now an asset, and the asset increases in the debit side or left hand side. And the contra account or the double entry account for this would be flow to the actual, let me just allocate it better, to the credit side of the customer. The customer is an asset, and the moment the asset decreases, it goes to the credit side or the right hand side. So in this case, the company has been issued 100,000 rand. It receives through the bank 50,000 rand. So the customer, in the books of the company, the customer will still owe 50,000 rand. Thank you very much for watching. If you find any value from this video, please remember to subscribe to this YouTube channel, and also please share this with a fellow entrepreneur friend.